Today we're talking about the real estate market in 2023. Will the real estate market crash? Where I'm investing for cash flow and where you should be looking as well. So, do I think the housing market will crash in 2023? The answer is kind of. I think that we'll continue to see drops, and we've already seen drops in housing prices across the board. I think we'll continue to see drops, particularly in some markets, and in other markets, I think that we've kind of reached what I think is an equilibrium point. One thing I think that you have to consider is how much cash is in the system. Tell me if you're the exact same. There are a lot of people who say, I've got my cash ready, I'm waiting on the crash, I'm ready to buy. Well, if everybody's got their cash ready and everybody's waiting on the crash, how will there be a crash? There won't be, because it's supply and demand. As long as there is a demand for real estate, then the market can't crash. And as soon as it does crash, let's say that it does crash, as soon as it does, and everybody jumps back in the market, guess what? It's immediately gonna go back up. It's basic supply and demand. I do think we'll see a decline, especially in some markets, but across the board, I don't expect some 40% decline like we saw in 2008. I just don't think that it's gonna happen. Especially, a lot of people aren't talking about this, in the commercial real estate world, prices have already crashed. I think that prices are down at least 15 to 20% across the board. And really, when I say prices are down, I've personally seen that a lot more investors are backing off of speculative assets. A lot less people want to bid on land that can be developed on. A lot of people want to bid a lot less on value add projects that need a whole lot of work and aren't going to be cash flow positive for 2 to 3 years. Back in 2020, 2021, people were willing to pay the price that those things would be worth after they were developed or after they had all the value added. And what I've started to see is people backing off, and they're still paying more than those deals are worth today to most people, but they're paying a lot less than they were. They're definitely not paying future values. But whenever we talk about how to protect yourself from a crash, because we don't want to wait, right? Nobody wants to wait to be investing. If you wait, there will never be a right time to invest. So you have to get into the market. Where should you go? What should you do to protect yourself from a crash? Number one, buy deals that cash flow today. Don't buy deals that cash flow in the future. Number two, get fixed rate long-term debt. When I talk about long-term, the balloon is at least 5 years, okay? Make sure it cash flows with the debt in place. After that, you need to be in a great market, okay? So let's talk about what makes a great market. Number one, population growth. Number two, GDP growth. Essentially growth in the economy, creation of jobs, that type of thing. So if I look at the fastest growing states across the board and where you should be investing, I'm looking at places like Nevada, Utah, Texas, Tennessee, North Carolina, Georgia, Florida. All of these places have more than a 1% year over year population growth. It means for every 100 people that are there this year, next year there's 101 people. Okay, it doesn't sound like a lot, but the United States is growing at a 0.38% population growth rate, 0.38%, the entire United States. So what does that mean? That means that if you're investing in a state with more than 1% year over year population growth, you're more than double the growth rate of the United States. And if you're growing at 1% or more per year, then you're in a good spot. So where I'm investing in 2023, Tennessee, Georgia, and Florida. Those are the three markets that I'm going after. If I lived out further towards the west, I would invest in Texas, I would invest in Utah, I would invest in Nevada. Where I would not be investing is certainly West Virginia. West Virginia population is declining at 0.33% a year, right? So horrible growth. Illinois has a negative growth rate. Connecticut is just barely growing. All of the Northeast, I'm not investing in. The Midwest, like Missouri, Arkansas, Kansas, New Mexico, I'm not investing there. Growth rates are pretty much flat, just in line with how the entire United States is growing. And I'm certainly not investing in California, Oregon, Washington, any of those. I just don't like those markets, right? So that's why I'm not investing there. What I've been telling the people who are in my coaching program is, do we know what real estate prices are going to be in 1 year, 2 years, 3 years? No. But if I had to bet every dollar I had, if real estate prices would be higher in 10 years in 2032 than they are today in 2022, I would bet every dollar I have on that. So invest for the long term, make sure it cash flows today, and you'll be fine. If you like this video, hit the like button, subscribe to the channel, share it with a friend. I would really appreciate it. And if you want Skip the Flip 1 or Skip the Flip 2, I give the audiobooks away absolutely free on this YouTube channel. Be great.